Good afternoon, everybody. This is Dr. Janice Moriarty, President of the Massachusetts Dental Society. It's my privilege to welcome you today to the CARES Act, Interpreting the New Bill for Dentistry webinar. And I'm pleased this afternoon to introduce to you our speaker, Mark Rosen. Mark Rosen is a CPA and certified financial planner. He's a partner at Rosen & Associates, LLP, which focuses exclusively in the dental industry, helping more than 800 dental practices with over 1,500 locations with their accounting needs, bookkeeping, and tax needs. Mark is also a partner at More Dental Transitions, which provides valuation and transition services, and Rosen Dental Consulting, LLC. Mark's been a great friend of Mass Dental for many years, and Mark, it's my pleasure to welcome you today. Please take it away.
Okay, thank you. Okay, now we should be all set, hopefully. Let me just get confirmation that everyone can hear me now. And yep, okay, great. All right, thank you very much for the introduction. So it's been a crazy day today, and we're going to go into a bunch of different stuff. And so hopefully, as we get some more information, we'll update you on a lot of different things with the new act. So Dr. Moriarty, thank you very much for the introduction. Again, Mark Rosen here from Rosen & Associates. So lots to go through. We'll go through as best we can. It's a super changing landscape. Trying the best we can to keep up, inform you as much as possible. Lots of questions. You provided them as you signed up, which is great. We'll go over things. Hopefully, I will answer them all, try to hit others. But one thing I wanted to mention, we're one of the founding members of the Academy of Dental CPAs. And so all these accounting firms around the country have been working together hard to put out information to you guys all over the country, and I know this seminar was opened up to other people other than just the Mass Dental members. So somewhere around the country, again, the adcpa.org is a great place to find an accountant in the area to help you out. Okay, so let's talk about what's happening right now. So on Friday, the CARES Act got passed finally after lots of waiting time, and some of the big things that came out of it were the SBA loans, obviously, and then a couple other things that I'm going to touch on at the end. But the talk right now is clearly about the loans. That's the important thing that has kind of changed very, very quickly. And it's it's tough to keep up, and we're doing our best. So let's start with the first thing. So let's start with the EIDL loan. All right. So we're going to talk about a couple loans, but right now the only loan available through the SBA is the EIDL loan. Now, of course, the SBA threw us a curveball last night, and they changed the format. So if you try to apply, or if you applied 2 weeks ago, it was a web-based format where you have to download all your returns in, and you had to fill the whole thing out on the web. And then about a week or two in, they realized that the site continued to crash all the time. It was taking people 4 or 5 hours to do, so they changed it to make it an Adobe format. So you had to print out the forms, and write it all down, then upload your personal financial statement and your tax return and a 4506T, which gives the government permission to get the tax return, all this stuff. Again, taking people hours. So then as we were working last night into the wee hours of the night, all of a sudden a new site popped up and the government changed it. Now, if you applied previously, there was no opportunity to request this $10,000 grant. Okay, I'm going to talk about that in a second, about kind of what that means. But so right now, there are new applications available. And so if you did do it previously, we're going to talk about you may want to go in and look at it again. I don't think it will harm anything to do it, but on the new application, which is very fast, it took about 10 minutes to do. You don't upload anything, and you pretty much enter the practice information and then request the $10,000 grant, and then you put in your bank account, your routing number, your bank name, and kind of off you go. And now we sit and wait. What the next step is, I don't know. But let's talk about this loan and what does it mean. So part of this loan is a $10,000 grant within 3 days of applying, they say. So I have not heard of anyone getting this 10 yet. I don't even think the 10 was available until now. Now, tons of people applied today, probably, and will today after this seminar too. So in 3 days from now, we're going to find out pretty quickly if the $10,000, or I think it's up to $10,000, gets funded. So you may get $5,000. I don't know. So why would someone get the EIDL loan? What's the point? Okay, so the loan is when you get it, so you do not pick a number. That's the trick. Everyone says, how much should I apply for? What do I need? I have no idea. They tell you based on the information you give them how much they're willing to give you. And so I do know of some practices that have already been offered several $100,000 by sending their information in. But in this new application, you don't give them any practice information. So my assumption is this is sort of wave one of the application, kind of flush out all the people looking for the $10,000, of which they said there's only going to be $10 billion available, which is about a million practices. So if everybody applies or if everyone gets $10,000, that's probably going to go pretty quick. But that's just one piece to the puzzle. So if you get this loan is a 30-year, 3.75% loan. It's a really good interest rate, okay? And there's no payment on it for 12 months. Now, they say first come, first serve, and it's written in there. I'm not sure if that applies to the $10,000, which I think it does, or the EIDL loan itself. It's backed by the government. My assumption is that the EIDL loan itself doesn't run out for those practices that need it. But obviously, I don't know. I don't work for a bank, so we try to read as much as we can. So they want you to use the EIDL money for working capital to cover your payroll costs, but you can't, your rent, your mortgage, that type of thing. It's not able to be used to refinance debt. So in other words, if you have a loan at 6% with a local bank for a piece of equipment that you bought 2 years ago, the loan is not intended and can't be used for refinancing and taking out that bank. It also can't be used for shareholder distributions. So if you're an S corporation owner, you can't get $200,000 and then all of a sudden take $100 out and do whatever you want with it. There's going to be some type of accounting that they're going to look for somewhere down the line. I'm not sure what, obviously, because again, the things are changing as we speak. So let's talk about a practice right now. And so why would you get this? In my mind, you really want to bridge the gap between now and getting the second loan, which we're going to talk about, the PPP loan or the Paycheck Protection Program. So we'll go into that one in a second. So for this loan, you have it, you're going to keep the practice going, obviously pay your payroll. Most likely, from what I understand, a lot of people right now are furloughed or on unemployment. Most practices are doing that. Some practices are finishing up their last paycheck today or maybe this week for previous work, or they chose to sort of bridge that gap in the past from around March 16th to now when everyone's trying to flush out and figure out, what needs to be done. So for starters, my recommendation would be, if you haven't done it, to go apply for this loan. If nothing else, try to get the $10,000 grant, and the grant does not need to be paid back. It's just that. It's a grant. And they say whether you're denied or accepted for a bigger loan, that you still get the $10,000. So we'll see how long that lasts to get it. But I don't see any reason why you shouldn't get it. Now, whether you want to take the bigger loan or not, that's up to you, okay? Now, the good thing about this also is that there is no prepayment penalty. So let's say we take the loan, okay, let's ignore the second loan because we haven't gotten there yet. We take the loan and we bridge this whole thing, hopefully go back to work soon, and we come to July and we realize, hey, we're up and running, we're going smooth, we don't need the money anymore, let's give it back. So if you got a $200,000 loan, maybe you used $50,000 of it, okay, that $50,000 will remain a loan, 30 years, 3.75%, but the rest of it you give back, and you would pay most likely, I believe, the accrued interest from the time you got the loan, which is around now, to July, and you would owe the interest during that period of time to carry that debt, but you would not owe a payment on the $50,000 that you used up until 12 months from the time you got it. So plenty of time to get it, and it's really, I think, going to be a good vehicle for a lot of practices to make sure that you can bridge that gap if you're struggling with cash. Okay? So the next piece of the puzzle is this PPP loan, or a 7A loan. Okay? The first one, the EIDL loan, is also called a 7B loan. So it's the 7B first, because the EIDL loan is what's available right now. The PPP is not available, okay? It's not available, but unlike the EIDL loan, which you have to get online, the 7A loan, or the PPP, you have to get through a bank, okay? So what I would recommend, and the bankers are going to love me for this, is reaching out to your bank when you're done with the seminar, or done with the webinar, unless you want to minimize me, put me on mute, and call now, but you're really just getting in line and letting them know, hey, I'm going to be wanting this. I know you don't have the program set up yet, but just kind of put me on your list to do it. And you really want to do it with a bank that you have a banking relationship with, because you're going to have to provide lots of documents at some point, and I'll go through some of that stuff. But the fact that they have prior tax returns, or they can see that kind of thing, is pretty valuable. So let's leave the EIDL loan aside for a second, and now let's look at this PPP loan. What is it? Okay, so the goal of this loan is really to bring your employees back to work. Okay? So first let's talk about how much. In the EIDL loan, you didn't get to pick. In this one, you don't really get to choose, you get to calculate. Okay? So I would recommend sort of starting to gather things. And what are they looking for? They're going to be looking for your quarterly payroll reports. They're going to be looking for, I think I saw something say weekly payroll reports, but that seems like a lot. They may even be looking for some up-to-date numbers. But how does it work? You really want to get, they're looking for the number of 12 months of your payroll, okay? 12 months of payroll. However, anybody that makes more than $100,000 in the practice, they're included, but only up to a salary of $100,000. So if you're the doctor and you make $200,000, when I'm adding up the payroll for everybody, I'd add them all up before I get to you, and then I just add $100,000. Then I'm going to divide by 12 to get the average monthly payroll. Now, what am I adding in there? I'm adding payroll, I'm adding employee benefits in there, and some payroll taxes, I believe, in order to come up with our total number of the payroll. Some of the payroll taxes, I believe, not all of them, okay? Add it all up together, and then divide by 12, and then times by 2.5, okay? That's going to get me my number that I'm allowed to then go apply for. So let's just say I do that math, and I come up with a loan of $150,000, okay? And they give that to me, let's just say I get it in a week or two, okay? Whenever I'm going to apply, we don't know how long it's going to take to get it. And that's the part of the trick when we start talking about timing. But once I get it, I like to say it's kind of like the movie Brewster's Millions, right? You're going to get it, and now you have 8 weeks to spend that money in order for it to accomplish what you're looking to do. So what are we looking to do? We get the $150,000. We now have to spend it on, right here, payroll taxes, employee benefits, rent, mortgage interest, okay, and utilities. If I spend all $150,000 during that 8-week period from the time I get the money until 8 weeks, I'm forgiven. That loan is completely forgiven, meaning I don't owe it back, and I don't owe taxes on it either. Typically, debt forgiveness is a taxable event, but in this case, with all the new rules for this loan, it is not. So you're going to give me $150,000. I'm going to spend it on all of these things. So the recommendation to help track it is to open probably a separate bank account. So if you get the PPP loan, I would recommend opening a separate bank account so you can track this money. Because when it's all said and done, you need to show where it's going to. But there is a trick to this also. So I get the $150,000. I spend it on these things. I also need to make sure that I am employing at least 75% of the amount of people I employed on February 15th, same amount of people within 75% on June 30th. Okay, so when I pass the June 30th date, I need to be paying the same amount of payroll or pretty close to it. I can drop about 25% in my payroll costs and drop 25% in the amount of people. But it doesn't have to be the same people. It just has to be the number of full-time people. Okay, and so if I get 150, I employ the same amount of people. Let's say I do on June 30th that I do on February 15th, then the entire loan is forgiven. Now, if it's not, if I'm only able to spend $100,000 of it during that time period for some reason, then the remaining 50 becomes a 10-year 4% loan. Okay, so the first loan, the EIDL loan, was a 30-year 3.75. This second loan, which can be forgivable, is a 10-year 4% loan. Okay, so it's all about timing, right? Because right now, most of your staff's unemployed, right? We're closed, everyone's closed right now, and we don't exactly know when they're going to open yet, but let's just say you get the money tomorrow, okay? Let's say you get it tomorrow. I know they're not open yet. I know you can't apply yet, but let's say we get it tomorrow, and tomorrow is, I mean, who knows what day it is right now, but it's around April 1st, okay? So if you get it now, and for some reason, and I hope for you and me this is not the case, that we find out that you can't open again until July, let's just say June 15th, okay, June 15th. Well, if I get the money today or tomorrow, then I have to spend it in 8 weeks, but my staff's all unemployed, so what do I do? Well, you'd have to re-employ them, okay, and then we're going to pay them. Maybe they do work at home, maybe they take CE credits, they do something, but you're going to give them the full pay, pretty much. But if we use up that money, right, by June 1st, in order to get it forgiven, we need to employ everyone at the same level, paying the same amount on June 30th. That means you'll need to carry it for a month if for some reason, or 15 days, if you're not fully open. So I would love to say, okay, great. We know for sure we're going to be open June 1st. If we knew that, then in the most ideal world, and if you could time it, you'd say, great, give me the money 1 week before I'm going to open. Now I'm going 8 weeks. Now here's a little bit of discussion that's out there. The question in the law says it's 8 weeks, or the timing says you have 8 weeks from the time you get the loan. However, there is conversation that says this June 30th deadline. Like, do you have to spend the money by June 30th? That seems a little odd. I don't think the rules was meant to be written that way or interpreted that way, because if I get in line now and I need to, if I get in line now and for some reason it takes, 7 weeks to get this loan, and I get the loan or more, and I get the loan on June 15th, does that mean I need to spend my $150,000 between June 15th and June 30th? Like, that would seem very odd that would be the case, right? You're not going to blow all the money in 2 weeks. I don't think you're able to sit and give everybody bonuses or pay everyone 3 months, 2 months in advance. I don't believe you're allowed to do that. And so, therefore, that's why I really believe that it's 8 weeks from the time you get it. So if you did get the money on June 1st, you'd have it for all of June and you'd have it for July. But with that being said, again, going back to my example, if I got the money now, okay, and I paid it out for 8 weeks, then I'm stuck a little bit. If we don't open the doors until July 15th, how do I carry everyone? How do I make it to get it forgiven? So it's a timing issue, and I really can't say at this point how long it takes to get the loan, right? I mean, you may apply for it and it may come a week later, 2 days later, 3 weeks later. We don't know that answer yet. And so, rushing out to do it on day one right now, is it a good idea? Well, get in line. And I don't think you can tell them to, hey, hold it until I'm open, because that wasn't the intention, right? The intention of this loan is to bring everyone back to work, right? The government doesn't want everybody on unemployment. even though they're paying them more to do that for a moment, but we'll go into that, okay? So the goal for the second program, for PPP, is you'd love to get it forgiven while paying everyone during the 8 weeks. But again, suggestion, getting a separate bank account, because at the end of this, you need to submit a form detailing out everything that you spent the money on. And so if it's commingled with your other collections, hopefully, as you're open, it's going to be much harder to figure out and much harder to justify, what you did. So these are the two loans separate. However, okay, now we got a third step to it. All right. So let's say I have a fairly large practice and I have a couple people that make over $100,000, right? Or I have a practice that has a very high rent, a downtown practice, or I have some multiple locations maybe that has high rent. Okay, so when you do the calculation, you're taking payroll times 2.5. So why'd they do the 2.5 if I only get 2 months to spend it? Because the 0.5 is essentially there to cover rent and other things. So, okay. So now let's check out what we've got here, some examples, all right? Now, one of the things you can do with the EIDL loan is refinance it into the PPP loan, okay? So before I go into the example, let's talk about how this works. I get the EIDL loan. I apply for it right now. I get my $10,000, awesome, all right? I'm given, let's just say, before I get into this example, I'm given $100,000. Okay, so my loan is $90,000 because the 10 is for free. I don't touch the money, all right? Then I apply for the PPP loan. They give me $50,000. When I refinance it in, I now have, $140,000. So let's go to the example here. Okay, I apply for the loan. We'll use this exact example. I apply for the EIDL loan. I receive $50,000, $10,000 is a grant, $40,000 is my loan. Perfect. I then apply for the PPP loan when it's available, which we don't know yet, and they give me $80,000. So I don't spend, let's say, any of my EIDL loan. I hang on to it. I'm able to maintain with any cash in my account. I now have a $120,000 PPP loan because I've combined them. Now, again, back to my Brewster's Millions example. I now have 8 weeks to spend $120,000, and if I spend all of that on payroll, employee benefits, retirement, rent, and utilities, I can then get the $120,000 forgiven. And if I don't use it, then it goes into the 10-year 4% loan, okay? But I'm not sure yet, but I believe you can choose whether to refinance it in or not refinance it in. Because if I don't refinance it, okay, I've got a 30-year 3.75 loan, and I've got my PPP loan that I'm trying to use for payroll and rent and utilities, okay? But if I refinance it together, I've taken a 30-year loan and I've put it into what could be a 10-year 4% loan, right? Not as good as a loan, but if I can spend it on my payroll and rent, okay, and utilities, then I can get it forgiven. All right, so if we go here, let's look. All right, spend it on those particular things like we've been talking about. I've got, during that period of time, I get my PPP loan, and I've got $64,000 of payroll costs. I've got 8 weeks, I've got 2 months worth of rent. I've got 8 weeks again worth of utilities, $86,000. I was already given $10,000 before. That was the grant I was given, so I'm good to go there. So I've got $76,000 of eligible expenses, which I've opened a separate bank account for. I'm going to pay those things out of there, or I'm going to the dollar, transfer out. So in other words, you don't have to reset up your payroll to go hit another account. If you know and you get the draft agreement from your payroll company, which hopefully everyone's moved to a payroll company given all the tricks that the government's playing with your payroll taxes and whatnot, we can touch on that. You're going to transfer that exact amount into your checking account, and then when that money comes out, because as you probably know, when you move money back and forth between multiple accounts, you don't want it to be counted as income, right? So for it not to be counted as income, you either need to make sure you let your accountant know, hey, we moved this exact amount of money, so don't count it as income, or, you're going to see the two bank accounts, and as long as you reconcile the accounts to each other, you should be okay, making sure it's not picked up as income. So net eligible expenses, $76,000. All right, now let's go to here. Now, I've gotten my grant, okay, and I got my $40,000 loan. I've got my $40,000 EIDL loan. And in this example, I've refinanced them together, okay, refinanced them together. And I can go ahead and spend my eligible expenses. Now, in one example, if I use them all and I can spend all the money on these eligible expenses, I can get the whole thing forgiven. If I don't, then I'm just going to have a remaining loan. Or think about this. If you've got the extra money, so if I refinance and I've got the $120,000 going back up, okay? I've got $120,000 that if I spend in 8 weeks, I can get the whole thing forgiven. But I'm only able to spend $100,000 of it. I'm left with $20,000. Well, I mean, it's not that bad. You've got a 10-year, 4% loan. Or you just turn around in July, let's just say my 8 weeks was May and June, and I give the money back. I pay the interest from the time I got the loan, which was, let's call it May 1st, okay? Got the loan on May 1st, spend it over 8 weeks, don't quite spend it all. I'm left with some in July. I either give the money back and pay the interest that I held on to it for 2 months, or I hold on to it, and I've got a loan that I don't have to start paying back for, they say, 6 to 12 months. So I've got some time before I do it. So there's I guess strategies in some senses, but some things are just totally out of your control because you're going to go get the EIDL loan now, and that is my recommendation, to go at least try for the $10,000. Okay, I don't think there's any harm in doing that. You can probably decline the loan if they offer it to you, but not hard to take it. Now, do you have to refinance into a PPP loan? I don't think so. One thing we don't know yet is, can you roll part of it? If I'm given a $500,000 EIDL loan, which I do know of 2 clients of mine that have gotten those loans already, or offered them and been accepted, their payroll is, let's call it $100,000 or so. So you're not going to be able to spend all that, and to convert a 30-year loan at 3.75 into a 10-year loan at 4%, that's like you're going the wrong way, right? We're reversing it into a worse loan. So in that case, you'd probably keep them separate, right? You would not refinance them in. But if it's just a little, you could use a little bit more on the PPP side. Would you do it? I don't know if you can partially refinance. That is an answer I don't know yet, as we're still learning about this. I didn't realize when I became an accountant that I would somehow play the role of an employment lawyer and an SBA lender all at the same time. But we're learning quickly as best we can in the middle of tax season, which is nice. So right now you've got the opportunity for the 2 loans, okay? And you can have one or have the other or have both. You know, I've got the questions here. One does not prevent you from getting the other, okay? So that is not an issue. A lot of people said, well, I don't want to apply for the first one because I want to make sure I get the second one. And so, but from our understanding and everything we've read in terms of the CARES Act, one does not prevent you from getting the other. So I don't see any issue there. But the big thing really with the payroll protection loan is timing, right? Because if you could time it right, you'd find out when you're going to go back to work and then hire everyone and pay them during the time that you're working. But we don't have the luxury necessarily of doing that. And plus the fact we don't know when the dental offices are going to open back up fully. So should you wait? That's debatable. If this takes weeks and weeks, because I believe bankers are used to processing, 50 loans in a year, and now they're going to get 100 applications a day, so how quickly can they do it? I don't know. So hopefully in the next, couple days, we've been putting out a newsletter, and hopefully, I know lots of people have seen it. If not, you can go on our website and check it out. But, trying to detail out and help you along with the loan process, putting out some details in terms of what's needed for the PPP loan, which is going to be payroll reports and some of those other reports I had talked with before. Are they going to want up-to-date financials? It seems so, up to date being the first or second month in 2020. But again, the banks don't even exactly know what they want yet, so it's we don't quite have all of the details to everything. So that's one of the big pieces, to what's come out now. People, again, not to confuse, the PPP loan, it's not available yet. It's coming out. When? I don't know. I've heard rumors being this week. I've heard rumors being next week. I don't know how fast the government can get their procedures into all of these banks and sort of go from there. So I'm really not, I'm not sure. So you want to start getting prepared. You can, look up what's needed right now before different newsletters and stuff come out. But again, it's going to be along the lines of payroll reports, might be some year-to-date numbers. I do not believe, I'm pretty confident, that it will not be 2019 taxes, because most people's taxes are not done. They're obviously on pause for a couple months as we handle all of this stuff. So other things in the CARES Act that I thought were, important things. So one of them is a delayment of the employer payroll taxes. Now, I'm not a huge fan of this one, but let's talk about what it is, and I'll tell you why, right? So what it's saying is that for payroll taxes, as the employer, you pay 7.65% of every employee's payroll you pay to the government. Now, you withhold a different 7.65, so when you submit it to the government, you're really submitting, 15.3%. But out of the 7.65, that's your responsibility, 6.2% of it is FICA taxes, okay? So in doing that, you would withhold the taxes from the employee. I'm sorry, you would hold on to your taxes that you don't have to pay in, and you'd get to keep it through the end of the year, and then you'd start to pay it back in 2021 and 2022. But what is this really? You're really just taking a loan from the IRS, right? Instead of taking it from the SBA or a bank, you're borrowing the money that you're going to owe them, I guess interest-free, right? Because I don't think there's an interest rate to it. So you're borrowing it interest-free, but it's small dollars. I mean, it's really not going to amount to a lot. And most people will sort of forget that I do owe this back. So when you see the money in your bank account, you're going to think, oh, I have this money. I can, spend it, or I need to spend it on buying stuff. But in reality, it's not really yours to spend. So I don't love borrowing from the IRS. That's sort of the last person I'd want to borrow from. So, but if you get the PPP loan, you cannot, during that period of time when you're paying those employee taxes or the employer taxes, you can't then defer that too. That's essentially like double dipping. So the deferment would have to be outside of the window of getting the PPP loan. So most likely we're talking, July, August when the deferral, and then what are you deferring? August through December? You're not going to amount to a lot of money to do it. So I believe, to the best of my knowledge, that that's a choice. You can tell your payroll company, hey, I want to defer this money, and therefore it remains in your bank account and you don't give it to the government. But I also think if you don't say anything, then they just keep going the way it's always been going. And again, in my opinion, I don't think that's money that you need to be using. Some smaller things here, there's a $300 above the line charitable deduction. If there are any teachers out there or spouses of teachers, there's a $250 one for teachers. It's the same thing. Right now a lot of people are not itemizing deductions on your personal return anymore because the standard deduction has grown so much. And so the charity that you're giving to help out the causes you're not getting any benefit for, and the government is now saying pretty much, help others in need. We'll give you $300 of a charitable deduction as long as you pay that, of course, but you don't need to itemize to get there. So one of the other things which was kind of interesting in the bill is, they're really trying to make things, as you know, beneficial for employees. And so what they're saying here with this $5,250 is there are rules set up where you can pay tuition for different employees. Okay, you can pay them up to a certain amount for tuition. It's almost like paying for CE for them. But now they're saying you can make a loan payment as an employer. You can pay your employees loan payment of $5,250 to sort of help them out during this time. Now I like this actually. Why? Because you don't pay payroll taxes on it. That money doesn't get matched in retirement. It's not taxable to the employee, so it's really a win-win for both of you. Now, if you are an S Corp owner, okay, or a C Corp owner, even though I don't like C Corps, I say that all the time, but if you're an S Corp owner and you're a W-2 employee and you also have student loans and you're the owner, can you pay $5,250 of your student loans from the practice and have a deductible? The answer is I don't know yet, right? The guidelines haven't come out yet. I mean, this whole process is pretty amazing. Like, they are writing laws and trying to get guidance out faster than they've ever done it, and we're trying to interpret things and get guidance faster than we've ever done it. And so some of these things come out and they kind of throw the rules at you, and then they go back and tell you what they mean by the rules. So that's why there's some not answer. You don't have answers to everything, but you also got to be really careful on the source that you're reading, because it changes so quickly, and because the landscape is just really, really hard to follow. You may be reading things that are a couple days old, and something new may have changed over that period of time. And so you want to make sure you're using good sources. You want to make sure you check in on different things and make sure that you're not missing anything by mistake. So also one of the big things here, obviously, was stimulus checks. These supposedly were coming out, or will come out 3 weeks from, I don't know, last week. And so the way they work is, $1,200 to a particular person, $2,400 if you're married filing jointly. But the phase out starts at $75 and then phases out if you make too much money. So if you're married filing jointly, and I'm not positive yet, and I didn't get confirmation if it's your adjusted gross income or your taxable income. I would assume it's your taxable income, but I haven't read the law exactly to confirm that, is over the $198,000, then you will not get a check. But be careful, this is not free money, even if you do get it. You actually owe it back. It's sort of like an advance. They give you the money now, and then on your future tax returns, if you then make more money for whatever reason, they then make you pay it back in one way or another. So although getting the money now is great and you're not taxed on it right now, you do get sort of taxed on it in the future in a different way. So you kind of owe the money back. And I think a lot of people don't realize that when you get it. All right, so more things in the CARE Act that are important are retirement changes. So I was emailed this morning a doctor who they changed the rules also that it's now 72 years old when RMDs, required minimum distributions, begin. It used to be 70 and a half, which is an odd age, but it was 70 and a half previously. Now it's 72. So if you were supposed to take RMDs in 2020, they've said that you do not have to take RMDs, which is probably a good thing, right? We can leave the money in there in the market, which has obviously struggled, although last week was, I think, a big week. But it struggled, so leave the money in there, let it grow, great. The other item that they changed was if you make withdrawals from a retirement plan, typically you owe the tax in the year you take the withdrawal. But what they're saying now is that if you take the withdrawal, this is out of an IRA, okay, not out of a 401k plan. I can talk about that in a moment. But out of an IRA, if I took out $100,000, okay, I then can pay the tax on that $100,000 over the next 3 years. But over the next 3 years, I can also put the money back in and not have to pay a penalty for taking it out, and really, shouldn't have to pay tax on it because it's a rollover. So if you did that in year one and then you put the money back in year two, you'd have to probably pay some tax in year one, or part of the tax, 1/3 of the tax, but then you probably go back and amend your return and probably get that money back. So that's most likely what you would do. But it gives you the opportunity to take out a little more money. So not necessarily in the CARES Act, but it's been talked about a lot. I'm going to go through this, and then I'm going to go through some questions people had and make sure I hit up some answers there. So as you know, tax deadline has moved from April 15th to July 15th in federal and Massachusetts and a lot of states in the area. I think most states in New England have now moved. So if you're not from Massachusetts, you probably just want to confirm with your state and look at that, but I'm pretty sure almost everybody's said that at this point. So first quarter estimates and any IRA contributions, but first quarter estimates are not due until July 15th. However, right now, second quarter estimates are typically due June 15th. So that seems a little odd. We have not seen any guidance yet that says that the June 15th has actually moved. So right now, technically speaking, I guess that you need to pay your second quarter by June 15th and then your first quarter by July 15th. That just seems odd all around. So I'm sure there'll be more guidance on what needs to be done there. So, so regarding the tax standpoint, I've already been asked the question, well, what do I do for estimates, right? I was closed for 2 months. And that's a good question. How do you calculate those right now? So part of it's going to be a little bit of planning, but, I can't say this for sure, but I have a good feeling that if you're shorter on your estimates this year, but you make it up at the end of the year, typically you pay estimated tax penalties. My guess is they're going to be a little more lenient on doing that. So, there could be an opportunity to hang on to your money a longer period of time, possibly pay some estimated tax penalty in the hundreds of dollars, not a huge deal, but then evaluating it in October or November, doing tax planning to see, how did I really fare for the year? Did I make up the shortage of income during the period of time that we were closed? You really got to look at that. So those practices that are on, unfortunately, haven't paid in all their taxes from prior years, the government is deferring installment agreements, okay? So as I said before, I don't love borrowing from the government. That's not really where you want to borrow money from. However, if you can't pay a tax bill, which unfortunately I have a feeling that I couldn't pay it on April 15th, I probably can't pay it on July 15th, in which case if you owe it then, whether you're on extension or not, you owe the money at the filing deadline, you may have to go on an installment agreement. So if someone did it previously, any installment agreements right now are deferred past to July 15th, I believe. So if you owed them in May or in April, you don't have to make that payment until July. So that's something to look at. So on here, I've been asked some questions about different things. So one of the big ones that came up were again, I am not an employment lawyer, okay? I will specify that now. But with the change in the CARES Act stuff and other types of bills, sole proprietors and self-employed people can, yes, apply for unemployment. Will it affect your rate? Yes, but it is limited a little bit. So the way unemployment's now working is, the government said they're going to give everyone an extra $600 that's on unemployment. So the amount of money you're going to make from regular unemployment plus the $600 is most likely going to exceed the amount of money your rate's going to go up by putting yourself on unemployment. If you're working part-time, when you go online, it says, I'm on call or working part-time. You can mark that box since you have reduced hours. My opinion was, most people right now are furloughed. They're retained their jobs. You've retained their jobs. You're most likely still covering their health insurance. And I know that was a question too. What do I do? I was withholding money from their payroll to pay their health insurance, but now I'm not giving them any payroll. So what do I do? Well, I think you want to lean towards the side of your employees, right? They're your greatest asset, and you want to treat them as best you can. So you're going to cover their health insurance. Later on down the line, if you want to try to deduct more from them to make it up, that's totally up to you. If you call it, listen, thanks for sticking with me, I'm just going to cover you for this month or two. But when you do get the PPP loan, right, now we're going to start paying them again, essentially on free money if it all works well. So, we're looking at some strategies that can you pay them and withhold more. I'm not sure yet, right? We can't go giving bonuses to everybody and blow the money in the PPP that way. But we can look at, can we reimburse ourselves potentially too? Again, things we need to look at. So sole proprietors, unemployment, that's good. What's the time frame to use the money, from the PPP? It's 8 weeks from the time you get the money. That's our understanding there, for sure. So we talked about the fold-in, how to tuck in, how to refinance, I guess I should say how. The ability to refinance the EIDL loan into the PPP loan. That's something you want to look at. Again, partially can we do it? I have no idea. And how knowledgeable the bankers are going to be about it, they're just learning too. So they might know, they may not know. I'm not sure. So right now, where's the free money? Okay, the free money is in the $10,000 grant with the EIDL loan, which you don't have to pay back, and you can spend it on anything. And the free money, if you hit the certain benchmarks, is in the PPP loan. Again, I think that's like the golden egg, right? That's the purpose, is to pay the employees and use it for specific things. So you really want to see if we can get that one. Not quite sure all the different documents that they want yet, as we're continuing to learn all of those types of things. And then, just to make sure people do get confused, that PPP loan and the 7A loan are the same thing, right? The Payroll Protection Program and the 7A loan are essentially the same thing. But during the 8 weeks, got to make sure we spend it on the right things to get that taken care of. And then there's other questions kind of regarding employees and having them on unemployment, and a little bit of sick leave questions, which is still a little bit up in the air. Again, there's lots of debates whether they, as dentists, do you fall into the paid sick leave? And I know the ADA is working really hard to get clarification on that. There's different language with different interpretation that would say you're excluded. I'm not an employment lawyer. Again, I'm going to kind of continue to repeat that. So you really want to speak with an employment lawyer if you aren't sure. If you've terminated your staff completely and you have none, well, then they're off the hook there. If they're furloughed, are you still off the hook? From what I've read, the answer is yes. But again, not an employment lawyer, so I'm not sure there. So, it's a moving target all the time. Hopefully this was helpful. Again, you're more welcome to jump onto my website and get that newsletter and try to push things out and get some information there. But good luck to everyone. Hopefully we'll get back to work soon, and I hope this is beneficial.